morning, this is Federico Bentley from Ayondo Markets giving you this morning's market update. We head to Greece this morning as the Athens Stock Exchange plunged 22.86% this morning when it reopened after a 5-week closure. The Greek Stock Exchange had been shut down on June 26 ahead of the government's imposed capital controls to stop the possibility of capital flight from the country. Now heading to European markets, UK 100 is trading 18 points higher this morning, whilst the Germany 30 rolling is higher by nearly 50 points. And as for the France 40 rolling, it's up 10 points from this morning's open. Concentrating on the banking system, the UK's biggest banking said profit climbed 10% to $13.6 billion in the first 6 months of this year, from $12.3 billion a year ago and above expectations for $12.5 billion. Revenues rose to $32.9 million, up from $31.2 million during the same period a year earlier. HSBC announced the sale of its Brazil unit to Banco Bradesco for a higher than expected 17.6 billion reais, which equates to £3.3 billion, in its bid to sell off underperforming businesses. It also increased the sum set aside to cover costs from various regulation probes, such as the Forex rigging scandal, to $1.3 billion from $550 million. Looking at Lloyds, the government announced today that it sold off another 1% of its shares in bailed-out bank Lloyds, taking the taxpayers' stake below 14%. The latest sale means so far it's raised nearly £14 billion for the Treasury's coffers through a trickle of shares sales which initially announced in December. It's fantastic news that we sold more shares in Lloyds Bank, taking the total recovered to almost £14 billion, Chancellor George Osborne said. I am determined to build on the success and to continue to return Lloyds to the private sector and reduce our national debt, he also mentioned. This week, George Osborne is also due to kickstart the government's sale of its 78% stake in the Royal Bank of Scotland. The Chancellor's plan to offload the shares were announced during his Mansion House speech in June, and depending on market volatility, it could begin as soon as Tuesday. It comes 7 years after the Labour government used £45.8 billion of taxpayer money to save the bank after it almost fell apart at the hands of the financial crisis. Now focusing on US markets, at the close on Friday, all three of the main US indexes closed slightly lower after a sharp fall in energy shares offset gains elsewhere. ExxonMobil shares fell 4.6% after it reported second quarter earnings. Chevron shares dropped 4.9% after its net income fell 90%. Looking at Wall Street rolling, ended trading 51.98 points lower at 17,745.98. The US 500 slipped 4.7 points to 2,108.63 points, while the US tech rolling was almost flat at 5,128.28. Now for some corporate news. The owners of low-cost fitness chain Gym Group are eyeing a £300 million float on the London Stock Exchange, just over a year after abandoning plans to merge with rival Pure Gym. And Arriva, the company which runs London's distinctive Routemaster buses, could make a return to the London stock market 5 years after being privatised. Intertek's pre-tax profit rose to £139.1 million in the 6 months to the end of June, from £119.8 million during the same period a year earlier. German lender Commerzbank's second quarter net profit more than doubled to €280 million. Heineken's net profit rose to €1.14 billion, up 88% from €631 million a year earlier. Looking ahead, today for some economic data, we have the UK PMI manufacturing at 9:30 am, and later this week we have the Super Thursday. So Britain's mortgage borrowers will be warned this week to brace themselves for the highest interest rates on what City of London traders have dubbed Super Thursday. At least 2, perhaps 3 of the 9 members of the Bank of England's interest rate setting committee are expected to cast their votes for a rate rise. Confirmed hawks Martin Will and Ian McCafferty, who voted for rate rises throughout the second half of 2014 before changing their minds as inflation plunged to zero earlier this year, have signalled they could soon be ready to see borrowing costs rise. David Miles, another independent Monetary Policy Committee member, whose term is about to end, said in a speech last month, it was time to start bringing rates back towards normal levels from their record low of 0.5%. The time to start normalisation is soon. That is not something to shrink from, he said. That's all for today's news, so thank you very much for listening and all the best on your day's trading.